All right, welcome to Journey with James, and this is another week's update. We're starting in February. Let's just jump into it. Oil, it has been up and down for like the last little bit. We're going to look at a chart here in a sec, but it popped way up for some sanctions, I think on Iran or something like that, and it just kind of, I think it went to 80 for a little while, and it kind of came down, and then it's hovered so far. Excuse me, that's the daily. Yeah, it went up to almost 80. Natural gas yesterday. 2 days ago it was down 5%. Yesterday it was up 9%. Today it's down 3%. It is going everywhere. But let's look at them. But let's look at some other stuff real quick first. So, by the way, if you're new to the show, talk about energy, gold, Bitcoin, real estate, and quite a bit of other stuff as well. Gold has hit all-time highs. I mean, we have never in the history seen it hit 2000. We'll see if silver follows. Silver is hitting that the topping that it's used to. Now, there's a lot of reasons why. Most of those are because silver is an industrial metal, and the people that use the industrial metal and the banks don't want it to go too high, so they artificially push it down, is what everyone's saying. Platinum, palladium, it's kind of putting around. Bitcoin, we'll look at this chart a little bit, but it is going crazy. It's been up, down, up, down. I mean, will it hit? Will it pop past its all-time highs of 104, 107, give or take? Who knows? I don't know if it will. We might get into that later. But let's take a look at some crude oil. Now, I did change computers, so all my charts, I've got to redo everything. But let's take a look at this. So I drew some other lines. $65 is where if it breaks $65, it's going to go pretty darn low, right? Probably into the 40s, maybe high 40s, low 50s. If it pops up, excuse me. If it breaks 80, it looks like it could go to 84, 85. Next one, if I remember my lines correctly, is about around 93, 94. And then if it goes there, it could hit to 120 again. Now, where is crude going right now without putting a lot of lines into it? What do you see here as we go? We see it bounce. We see it hit this bounce up, hit come down, bounce, come down, bounce, bounce, bounce. Give me one of two things, right? Let me go over them for you. It could be a wedge, which is a bullish pattern. It kind of bounces up, bounces, and then eventually it'll break that barrier that's going through, right? Or it could be a descending triangle. Does the same thing, bounces, and has a flat part to it, and then it breaks the floor. Which way will it go? Who knows, right? But the people know the industry that I'm talking with, that I invest with, that we all talk, I'm gonna make some other videos about this, but we are seeing a huge amount of supply glut for the moment. But the process of where you get those supplies, the ducts, etc., how they pull out of the ground is at an all-time low. I'm gonna make another video of that a little bit later. So what does that mean? That means, excuse me, that means that oil is most likely gonna break to the high side, right? There's only two things that can really affect that. Well, two things that affect oil and everything else is supply and demand, right? If we don't think we're going to get more supply, is what I'm saying. Now, if OPEC flares up and Russia throws a bunch more supply on the market, then that'll change. But they're not really looking like they're going to, because they don't want the price to go lower. They actually want it to go higher. Is the demand going to go down? Well, right now, I don't think a lot of Americans are not spending. The only thing that's going to make a demand go down is a really bad recession. And right now, we'll look into the later this video. Trust me, if you want to talk about recessions and risks, stay till the end of this video. But we're going to look at that. But typically, what happens is crude causes the last leg to fall to cause a recession, because all these consumers trying to buy, and keep, and do all these keep their assets and trying to buy more at all-time highs, over leveraging themselves, and then all of a sudden crude pops up like $20, $30 and causes everything and its mom to go up, because energy touches everything. Again, energy is the economy, and then it knocks out all the weak legs of an economy, puts a lot more weight on it, and then it crushes the economy, and it goes it crushes itself in the wake of that. Done other videos on it, but long story short, you make a ton of money in it, and then it pops down, and then about 6 months to maybe 9 or so, it's back up 50% from where it fell. So let's go. So that's what I would say for crude It's it's probably gonna piddle around here for a little bit, depending on the whims of the news report. It might fly down, it might fly up a little bit, but it's probably gonna piddle around here until most likely maybe middle of this year, next year, something when a lot of supply dries up and we gotta drill for more, which they're drilling more for more right now, which is great. That stuff takes time to get on, so we'll see. All right, let's go on to nat gas. This guy is everywhere. The one thing I want to bring into here is this: if we pan out, I mean, we haven't seen. Oh, this is another thing I was going to do for crude. Let me go back to crude real quick. If we pan out, some technology issues, but here we go. If we pan out, and again, 65, we haven't seen it go under 65 since about, I'm going to call it right here, about March 2nd of 2021. Right? If you want to hit a wall, it was back in April 2019, January. 2020 is hard to really tell because it just everything falls down. So somewhere around mid 2019, if you want to call that early 2020, whatever. In 4 years, we haven't seen it go back under $65. We take the same thing for nat gas. We go back to like around, let's see here, go back over here again to 2020s. So my point is, it hasn't been that way in like 4 years, right? This was the best time to buy. If you had bought it, that would have been great. I mean, if you swung it up, sold, swung it up again, like just hold it because it's going to fly. Let's see here. Um, it's above the 200, which is great. I mean, it's going to just fiddle fart around here and kind of go up depending on what happens with the weather, right? Which we're going to get into that in a little bit later. But there's a lot of good hopes for it, is my point. And oil companies are now starting to drill and frack because they don't want to do it at $1 or something. They want to do it twice as much. And that's going to help. Also, if Trump, it's hard to keep up with all those executive orders, to be honest with you, and all the actions they take, right? He only done like, I think his first day in office, he did 6, but it had 200 actions or something like that. Still a lot to keep up with. I'm trying. But if he undoes the natural gas export, this is going to go up, my estimate, to at least above 4, probably around 550, give or take. 550 might just bounce around here for a little while, and that would be amazing for us in the industry. Bitcoin, let's look at the chart here. That was an ugly drop. Look at that. Or I know it was some smart guy put a trade in for right here. Holy cow. And let me get corrected, but some smart guy put a trade in, put a buy for right here, and maybe wrote it up and sold it up here. That was $10,000 win right there. Look at that. Anyhow, sometimes you get lucky on those things. Anyhow, but it is just going sideways. I've listened to a lot of people talk about Bitcoin, and there's even more emphasis that it's gonna eventually be a $250,000 coin. But I don't think it's going to get there next, if that makes sense. My thought is it's going to fall down from here, probably back down to the median, because there's a thing in trading. All of these things that you get, you always give back on the other side. So it may fall down like 60 or whatever. The other thing is this: there's a lot of volume up here, right? So if it falls too much, I think someone was telling me like 90% of the buys or 70% of the buying or something like that was up here. And so if it falls too far, it's going to force liquidate all these people, and it's going to fall, right? So I don't know what's going to happen. I can't predict the future, but my thoughts, especially if we go through a recession or something like that, is that Bitcoin is going to, as it always has, follow the Nasdaq, and it's going to fall. And that's when I'm going to look for to pick up some to keep. But to each his own. I might be wrong. If you bought down here, or even bought down here lower, and you're not going to hold for the rest of your lives, or you just want to need to cash in, like up here somewhere is pretty good way to cash in type thing. So anyhow, but that is completely up to you. None of this is financial advice. We just paper trade. We just talk. We don't walk. But let's look at the U.S. dollar. Right, we're going to talk about all-time highs. The U.S. dollar is getting there. I mean, look at this guy. He's ripped up high, and it is, whoo, whoo. Um, yeah, my gosh, the value of the U.S. dollar is flying up high. Let me see something. Okay, so I just clicked on all-time. Here is a map of the all-time highs for this. Now, the last time we had a real big uh, double dip recession and stuff, it was the 70s, which is right around here, right? Look at the value of the dollar on this chart. Holy cow, that is when the world burned. Oh, we weren't as comprised of a world as much yet. In other words, you weren't getting a lot of loans from China in U.S. dollars and such like that, right? And other places. Um, this is in the dot-com bubble or everything like that was right here. You got, let's see here, 2008. You got the spikes here, right here, the value of the dollar type thing. And here is the value of the dollars that goes up, up, up. This is getting kind of scary because if the dollar is strong, it puts pressure on every other asset. That's the big thing, and that is the scary thing about this, about it being so high. But the dollar's going down. It's not worth very much. It's not valuable, and there's some truth to that because this is the dollar against a collection of other currencies, right? But what this is saying is that the world, not just America, the world needs more dollars. And what that happens is, I mean, they're going to take some out of circulation to pay their debts, and they're going to sell treasuries, which will be seeing happen, which raises interest rates, which puts pressure on everybody operating in the dollar, as we see today. So my point is, they say it's a strong economy. No, with the high dollar, it is not a, well, the high dollar, high interest rates is not a super, super strong economy. The medium dollar, you have a very good economy. Maybe we can check jobs, have we? All right, we'll check jobs in the next one. But speaking of groundhogs and natural gas, I should say, let's just see if we have a bunch of winter. The groundhog came out, long story short, and it says, hey, we're going to have 6 more weeks. So hopefully that will push up natural gas prices a little bit and we'll make a little more money in our oil and gas stocks or oil and gas hard assets. But if you're in Texas, it could be a little different.
And there you have it. We do everything a little bit different in Texas. In agreement with Punxsutawney Phil, Gator Country's Big Al, predicting 6 more weeks of winter. Big Al didn't chomp down on a piece of elk steak that would have meant an early spring.
We did everything we could possibly do. We all want summer to get here, no doubt. But you know what you got to remember? Last week, we were at 7 degrees at night, right? Come on, I mean, so, you know, in only 1 week, he just hadn't gotten warmed up yet. I think we got a great forecast coming this week. However, today, Big Al did not want to eat.
Well, you heard it. Big Al, the Texas alligator, does not want to eat. So that signifies 6 more weeks of winter. Now, he did bring a good point. Because, you know, last week it was like 7 degrees at night or something. Well, in his area, in other areas, it was in the teens. But yeah, right now in Texas, it's like 70, 80 degrees. It feels amazing in the morning and at night. During the day, it feels too darn hot. And I don't want summer to come. I want a nice, really nice fall or spring to just stay here perpetually, right? But the gator and the groundhog have spoken. We're going to have 6 more weeks of winter, and that will help push nat gas prices up. So I will be happy about that. That's crude. So hopefully we will get up into, well, hopefully this will help us get up into the high 3s, early 4s. I hope the president says, hey, you can sell natural gas everywhere, and we go up into the 4s and 5s. That would be amazing. All right. Now, let's talk about housing. Pipeline for converting office space into apartments has surged by 484% in just 4 years, right? Let's go down to look at the big ones. Here's the numbers. But basically, during the pandemic, a lot of hotels and office spaces shut down. This was talking about just office spaces, but a lot of people were saying, hey, this is good real estate. We can convert it into apartments and sell apartments. And in certain areas, they're doing great. But it's starting to get flooded. New York is one of the most. Washington, D.C., L.A., Chicago, and Dallas, Texas, right? It's funny, like Houston's bigger than Dallas, but apparently they're down for the other ones moving more in. But you can look at the list. My point with this is that single family homes are going to have a lot of competition coming up. Actually, in Houston and some other large cities, they're overbuilt on just regular apartment complexes. And now you've got um, office space that is trying to be converted into it, which if it works, cool, but most of the time it doesn't work very well. Um, that followed by, let's look up new mortgage applications 2025. Mortgage applications decreased in latest NBA weekly survey. Mortgage applicants flat in early 2025. Mortgage rate applications decline as rates stay elevated. So there's a guy I follow. He talks about 7 is the magical number, and if interest rates are above 7%, people stop buying. If they're below 7%, especially like 6.5 and lower, people start to come out of the woodwork and start to buy. Okay, they're over 7% right now as I make this video, and that is going to put pressure on mortgage application rates. That you go to that plus more housing coming on, that's going to make cheaper housing more cheap, right? You get also the fact that for the last year or so, we have it's been cheaper to rent an apartment, or excuse me, it's been cheaper to rent, not necessarily an apartment, but it's been cheaper to rent than to buy. You put all these things together, it's putting a lot of pressure on the single family housing market. So my point is, just be careful. Be careful. We don't know which way this is going to turn. I have a guess on which way it's going to turn, but we just really don't know. So be prudent. Don't be foolish. This isn't advice. This is just what I tell myself every morning, right? Be prudent. Don't be foolish. Make sure you can back up all your debt, because if you can't, and this thing goes down, it's gonna hurt bad, and you will lose your. This is how I remember it. You're gonna choose to lose one of two things. You're gonna lose your ass or your assets, right? It's gonna be one of those two, and trust me, you're gonna keep your ass. All right, your assets are gonna be the one that goes. Little not PG there, but speaking of something that is much older, let's go to Warren Buffett. Hey, and I say that with all due respect. Buffett is the Daddy Buffett, as we call him. Uncle Buffett is he is one of the best investors out there. The only one that really beats him is Pelosi, and I think we all know why. All right, the Buffett indicator. What is the Buffett indicator? Well, it compares the total value of publicly traded stocks in the U.S. to the country's GDP. In other words, you got all these companies in your country. They have a total value, right? And then you have a GDP, gross domestic product, that your company, that your country produces. So it's kind of like saying the value of the house versus the rents of the house, except the numbers are not as good. Okay, the numbers are not as nice. So if you've got a bunch of companies in your country that have a value, right? Let's just say $1 million, but your country's GDP is not $1 million, right? It is like, say, 500, or we'll just say a 1-to-1 ratio. Let's say it is $1 million. That means your Buffett ratio is a 1-to-1 indicator, right? The issue with the Buffett indicator is a higher rate of, like, typically the GDP should be higher than the value of the traded stocks, or should be around as one as it could. It's at all-time highs. Okay, stock market gauge named the Warren Buffett indicator just hit all-time highs. I mean, it says 2.8. It's in percentage terms. So take that decimal and move it over 2. So it's the Buffett indicator is 206%. Okay, and you want it down at normal range is where you really want it. Whereas the Warren Buffett indicator all-time high. He's hoarding 3.25 billion, or 325 billion. Excuse me. Moved the decimal the wrong place on that one. It is one of those things where this is kind of scary times, and he knows it. And I think he knows what's coming. Right? Now, let's look at the yield curve. The yield curve inversion occurs when short-term bonds have higher interest rates than long-term bonds. Why does this matter? Think about your mortgage, right? If you got a 15-year mortgage versus a 30-year mortgage, remember last time you looked at those, the 15-year mortgage, it was a higher payment, but the interest rate was like 0.5% lower. Then the 30-year. The 30-year had a higher interest rate, but it had a lower payment, okay? So what does that mean? It means the bank is saying, hey, I will lend you, $1 million for that house. But if you want to lock it up for 30 years, it's going to cost you more interest, okay? Now, we can lock it up for 15 years, and I will give you a discount on interest because my money's going to be locked up for 15 years, not 30. I'm going to get it back faster, right? So in other words, it is a risk sign in lending that says, hey, longer duration loans should cost more. Short duration loans should cost less. Okay. Again, this is banking. This is not like fix and flips or anything like that, but this is banking. Oh, you can think about fix and flips in the fact of like, hey, if you borrowed money from your uncle or from someone in your networking group and you said, yeah, I'm gonna get it for 30 years, and they're gonna say, okay, I'm gonna charge you how much interest would you want? 25% interest? Yeah, I would let my money go for 30 years at 25% interest. Sure. That's gonna be a heck of a payday or something. But my point is, when short-term bonds have higher interest rates than long-term bonds, what does that say to you? What is happening in our economy? It means people need money now. They're willing to borrow more money on short-term bonds, even though it's higher, than invest in the long term. It means people need money now, right? And what this has traditionally said is when the yield curve goes down, that's a huge sign of bad things, right? But when it inverts, when it uninverts, that's when the recession's about to happen. So let's take a look at it. Here's two charts. We're going to go to the one with at the Fed, at the Fed or the Federal Reserve. Okay. So, well, actually, before we do that, I want to. Where is this one? Okay, no, it is this here. Can't find what it says online, but I know it in my heart. But the yield curve inversion has actually called like 16 out of the last 17 recessions. Okay, so this is a really good model for history if you believe in history. Okay, don't believe in history, do what you want. But here, here we go. On average, a recession occurs about 12 to 14 months after a yield curve inversion. However, the time can vary in between. If I remember right, it happens 6 to 8 months after it uninverts. Okay, but let's do this like about 12 to 14 months after yield curve inversion. They can, but we got like a 6 to 24 month wiggle room, right? Okay. It says in the past, an inverted yield curve has preceded every U.S. recession. And may say, however, it's not reliable. It's just preceded every U.S. recession. It's not allowed to predict over recessions over the time frame that investors care about. BS, right? The 2021 was an exception to the trend. Well, I think we understand why that is, because it was a giant plague upon the world. But anyway, let's head over and take a look at it. So let's take a look at history first, right? If you look at each of these areas, this is a recession, the ones that are grayed out. So you've got the one in the 80s, right? Which some people are saying it's just like the one that we're in right now. Yeah, it was 82. I heard 81, 82 was a hard one, right? So this was kind of the double dip recession, right? And you see the yield curve flying through everything, flying up and down like a Richter scale. 1991, there was a very small bit recession. I forget if that was a savings and loans or a different one. All right, ones we really kind of know and care about. Dot-com bubble. Okay, so December's here. It popped off like February. Had the Valentine's Day recession. Um, and then you've got the Great Recession that we just had, which lasted quite a bit of time, right? You got this little blip before the one we don't really count, the 2020 recession. But the yield curve comes up, and again, it dipped in here. I remember in 2018 where I started to liquidate a lot of stuff because people were saying, "Hey, it's going to happen," and in reality, the 2020 did show us that we were not economically strong, and then it pushed through, and then we just ripped down from like 2022. 2021 when the government started throwing money at people, it just started to fall, right, and it hit really, really low, like it has not hit that low since the 70s, 80s. Okay, and then it pops back up, and that's where we're at. So it actually technically it broke it in August. Well, it kind of came up and down. We'll say November of 2024, right? If we got 6 to 8 months, I mean, sometime we'll have a recession by the end of this year. If they're right, when it hit 2022, we've got a 24-month period. Yeah, July. So it should have hit. Yeah, in 2024, but it hasn't yet. So it's more when the yield curve uninverts, that's when it shows. But my point is, this is some scary stuff. This is, at the very least, it's uncharted territory, which is never good for an investor, right? So To recap, gold is up, which tells you there's a lot of uncertainty, right? People are going gold. Bitcoin is flying kind of everywhere. It's up, but it's kind of flying. Who knows? It'll stay over above 100,000 or what? We don't know. Crude is kind of going up and down. It's in its track. Natural gas, same way. Hopefully, it will come up. And housing is at a standstill. And one of the smartest, biggest investors on the planet is just hoarding cash. So that is what we're going to wrap up. Oh, one more thing. I almost forgot. Just for a little bit of news. President Trump signed an executive order for the U.S. Sovereign Wealth Fund. He wants to try and buy TikTok, okay, and possibly put Bitcoin into a sovereign wealth fund, which would make the price go up a lot higher. Now, Congress still has to pass it. And we know how fast the Congress goes through things. So we're going to sit tight and we're going to figure this out and see what happens. There's no promises. There's no anything. It's just kind of a wait and see. So we're going to wait and see. But anyway, I'm going to end this. Hopefully you guys do well. Make your digits go up. But again, just stay frosty out there, man. Stay safe. If you are investing into hard assets, it's going to be crazy. We think oil is going to pop up here pretty soon, especially towards the end of the year. Even if it stays in this, we're going to make a lot because oil companies are starting to drill more. And so that's going to be great for us. If that interests you, let me know, and I will talk with you later.